the right stock at the right time.
Hello and welcome. This is All You Need to Know. I'm Agam Akil. Let's start off with the global markets, which at this point in time, we've seen mixed cues coming through, but the US markets standing steady, seeing about, well, gains of anywhere between 0.2% to 1%. European markets have also seen some steady gains, with the exception of the FTSE, which has declined by around less than 1%. We've seen some gains coming through in CAC index, and Asian markets currently also, well, trending higher in general. The SGX Nifty is also indicating an up move of around 16 points. We'll be watching out for this one. But among other factors and what's happened yesterday, we saw 0.5% cuts for the benchmark indices, but the broader markets did much better. In fact, 0.5% gains coming in for the mid-cap index, small-cap index also trending in the green. The Nifty Bank and the PSU Banking Index will mixed cues coming in, but the Nifty PSU Banking Index standing out here. What also stood out in terms of sectoral indices is the Nifty Metal and the Realty indices with 1% gains for each of these. But when it comes to your ADRs at this point in time, some weakness seen in Dr. Reddy's, Infosys and Vedanta. On the other hand, we've seen well, marginal gains for ICICI Bank and HDFC Bank. Coming down to your foreign institutional flows, about nearly 1,500 crores worth of net selling on from the FI's standpoint. DIs, on the other hand, go ahead and buy around 1,100 crores worth when it comes to your flows in the equity markets. But coming to contribution, we've seen Reliance Industries bear down on the index, down around 22 points, followed by HDFC Bank, Infosys and IndusInd Bank. Coming down to the future space, now we have seen rollovers pick up, and as you can see, rollovers now stand at around 53%, largely in line with the previous 3-month average for the Nifty. And coming down to the Nifty Banking Index for rollovers too, that's where we've seen about 45% coming through. And of course, today is the final day, and we're just going to have to wait and watch whether or not this actually continues moving forward. But when it comes to open interest distribution across, we've seen max OI around the 11,500 put and 11,800 call. That gives you a rough range within which you can expect the Nifty well to move around over the next few days, and perhaps where we can see the Nifty well also expired today. The 11,700 mark was the most active, considering we saw so much unwinding in the 11,700 put. But let's take a look at the Nifty put call ratio. That stands at around 1.78 from 1.94. The Nifty banking put call ratio has also come off to around 1.17. In terms of stocks, we're watching out for GN Irrigation, which moves out of the FNO ban. And in terms of other stocks, we have GSW Steel, which saw fresh longs considering its entry into the Nifty. We will also have a lot of traction in Bharat Forge. It also has substantially high rollovers. And on the other hand, on the losing end, we're tracking Interglobe Aviation, which declined by around 6%. So we'll be watching out for some of these names as we move into trade today. But now let's go across to Bloomberg's Paul Allen for the top international headlines.
President Trump is warning of, quote, bigger than ever joint military exercises with South Korea and Japan if North Korea nuclear talks stall. He made his threat after suggesting that China was hindering the negotiations due to the escalating trade war.
Now that we're in somewhat, I don't like to call it a trade war, and I think, you know, our country is doing very well, but China's having a very, very tough time. And I think that China makes it much more difficult in terms of our relationship with North Korea.
Special counsel Robert Mueller has asked for more time to consider whether to retry Paul Manafort. Mueller made his request saying he doesn't have sufficient information because Manafort's lawyers haven't filed post-trial motions. President Trump's former campaign chairman was found guilty on a string of charges last week, but the jury couldn't decide on 10 more counts. Turkey has reintroduced borrowing limits for overnight transactions in the interbank money market, effectively tightening liquidity after 2 weeks of unrestricted funding that aimed to contain the lira crisis. The limit will be set at the equivalent of about $7 billion US, still looser than before the threshold in force before August 13th, when unrestricted funding was allowed. The Indian government is said to have asked the RBI to prepare a list of merger candidates as part of a drive to clean up a banking system drowning in bad debt. We're told officials also want a clear time frame for creating fewer, better capitalised lenders and improving regulatory oversight. Indian banks have the worst SAR debt ratio after Italy, among the world's 10 largest economies. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
In terms of the dollar, I think what's happening is the U.S., from an interest rate perspective, still has higher rates than most of the rest of the world. So I think, I've said this before, money tends to flow where it's treated best. And I think, the higher interest rate differential here relative to, in particular, Europe is forcing dollar strength. People are coming in, buying dollars, converting them, and turning them into and buying U.S. assets, really. I mean, the U.S. stock market is one of the only ones that's above its 200-day moving average. So I think money is just flowing to the U.S. right now. It's flowing to where it's treated best.
Okay, so it sounds like the fundamentals on oil might be pretty strong, too, that we could have that. Let's, in fact, take a look at the seasonality of oil, because this is an interesting chart. It's a 5-year chart when we hop into the Bloomberg. And talk to us about what's happening here.
So it's a 5-year chart, and it kind of shows that we're getting to a point.
It's a 1-year chart, sorry.
Okay.
Over the last 5 years.
Over the last 5 years, oil has tended to move lower from this time of year and into the end of the year. But that's really a function, in my opinion, of 2014 and 2015 really being bear markets for oil. If you go back a little further, if you look to, kind of over the past 10 years or even the past 15 years, what you'll notice is that over the course of the next 5 weeks, it's actually seasonally strong for oil, which is why I think oil is a compelling trade right now.
Okay, so in white there, that's oil to this year to date, and then the orange line shows the average. So you're saying that you think that we're not going to see that average. So let's take a look at your trade by looking at another chart here in the Bloomberg. And you expect to see a bit of a pop higher for oil in that little bit of a nascent range. Right.
I wouldn't be surprised to see oil work higher here. I think you have really good support at the $64 level. It was the highs kind of in early 2017, the January-February timeframe. Earlier, back in June, we pulled back and tested that level, tested it again later in the summer. The rising 200-day moving average is at right around $65. So I think the path of least resistance is higher for oil. And I know we're kind of in the middle of the range, having a good day today. And the reason I think the path of least resistance is higher really comes from a momentum standpoint. If you see the RSI on the bottom of the chart, you notice during a lot of the pullbacks in July and so far in August, the RSI cannot become oversold. To me, that speaks to the strength of the uptrend for crude oil. I wouldn't be surprised to see crude oil take out the recent highs around $74, trade up to 75 or so. So for me, I like being long crude with a stop at $64 for 75 on the upside.
Well, stock of the day today is Reliance Infra, on the company completing the deal for sale of its stake of Mumbai power business to Adani Transmission. The deal has been valued, as suggested, at 18,800 crore kind of enterprise value. The pact for this deal was signed back in December 2017. And if you look at the transaction, that's going to be overall completed or closed next week. With this, Adani Transmission will have around 35 grid substations. And that's that we have in terms of the deal. If you look at the structure right now, acquisition is expected to be housed in Adani Electricity Mumbai, which is going to be a newly owned entity and going to be a subsidiary of Adani Transmission. However, if you look at the overall objective of this deal, well, in terms of the objective, clearly the deal is the funds of the deals will be utilized mainly towards the reduction of debt. Total debt value will be reduced by 13,800 crore. And the remaining 5,000 crore will be the regulatory assets under approval, which will flow in Reliance Infra by the end of 2019. And the overall objective is to make the company debt-free by 2019 and also to achieve good ratings. Well, if you look at the debt picture with this, right now, long-term borrowing along with that is around 14,000, 3,600 in terms of short. So you have the 18,800 crore kind of a debt that we saw in FY18. That completely goes out of the book, or maybe just 15,000 crore kind of a value goes with the book. Right now, the company could be looking at a debt of around 3,000 odd crore kind of a level. Overall, the power business, which is not just Mumbai, it's also Delhi, it contributes to around 87% of the overall EBIT of the company. What's left with Reliance Infra post this deal will be the Delhi distribution business, which it has a 51% stake, the Reliance Power business India, wherein it has a 43% stake, and the EPC order book, which is worth around that 27,000 odd crore kind of a mark that we saw as of June quarter. We also have 11 revenue generating road assets and a Mumbai metro line where the company has around that 69% kind of a stake. Reliance Naval, where it has a 31% kind of a face, and apart from that, it will also own non-naval defense business and regulatory assets under approval, which are around that 5,000 odd crore. That's as JP Morgan has suggested. All right, let's also listen into what Reliance Infra Chairman Anil Ambani had to say about the company's plans going forward.
Reliance Infrastructure's gross debt will be reduced from about 22,000 crores to only just 7,500 crores, representing a steep debt reduction of 65% in just a single transaction. Reliance Infrastructure's annual interest cost will also be drastically reduced by nearly 70% from 2,600 crores to just 800 crores annually. Reliance Infrastructure expects to be a zero debt company next year and will aim to be a top-ended credit-rated company.
Well, mixed cues coming in from the commodity space, starting off with oil prices, which saw a 1.5% uptake in the overnight session on the back of surprise inventory drop that we got from EIA. So, in fact, domestic inventories, in fact, declined about 2.6 million barrels for last week, as reported by EIA. Now, remember that this was more than anticipated or indicated in the Bloomberg survey, which had forecasted a 1.49 million barrel decline for last week. So, that was the positive that came about for oil prices, but the base metal space was under some bit of pressure as the LME index itself snapped its two-day gain. Aluminium was one of the top gainers, which climbed for a fifth straight day on the back of supply concerns and in fact continued its longest winning streak since the month of April. Copper, on the other hand, snapped its two-day gain, and we had the likes of zinc and nickel, which declined more than 1% each. Now, if you look at the Shanghai Futures Exchange, there's some bit of softness come about for most of these base metals, especially Shanghai Steel, which is down over 2% and is seeing its worst intraday fall since June 19 this year. Shifting focus to the precious metal space, some weakness for gold prices as well, as gold in fact declined for a second straight day on the back of the Trump administration working with major trading partners in an attempt to reach a new trade deal. But how does all of this pan out for the dollar index? We have Saloni Dhanuka, who joins us to give us a currency market check. Morning, Saloni.
Good morning, Jayesh. So I'll speak about Indian rupee first. It weakened to fresh record low yesterday of 70.59 levels versus the dollar. Now, traders do believe that the currency was largely weighed by the month-end dollar demand that we have seen from importers amid currency expiry day. Do remember the home unit touched an all-time low of 70.64 levels intraday and ended before ending well above the crucial 70.5 mark. If you see so far this year, home currency has weakened almost 10%, making it the worst performing Asian currency, and it is also on track to lose for the 7th straight month in August, its longest losing streak in nearly 18 years. Well, speaking about bond markets, sovereign bonds declined for the third straight session yesterday as 10-year benchmark bond yield rose nearly 2 basis points to end at 7.92%. Remember, yields have risen almost 5 basis points so far this week. On the global front, dollar index now trades lower for the 5th straight session. It trades well above the 94.5 mark in the early Asian hours today. That apart, if you see pound, it has rallied versus the dollar yesterday after European Union chief Brexit negotiator offered a partnership to the UK, and we have seen pound rallying up to 1.2% versus the greenback yesterday, the most since Feb 2018. And also, euro is trading with a mixed cues versus the dollar dollar today. And lastly, if you see dollar rupee now, it is trading flat in the non-deliverable forward markets, which indicates a flat opening for Indian rupee in today's trade.
Amongst the stocks to watch is Greaves Cotton, which has bought about 67% stake in electric vehicles, maker Ampere Vehicles, and that is for 77 crores. And they also have an option to pick up an additional 13% stake for 75.5 crores. So that's one stock that we're watching out for. But also keep an eye out for CESC. Now, this is on the back of a ET report which says that Amazon is in early talks with CESC for picking up a minority stake in Spencer's Retail, this year food and grocery retail chain. So let's see how this one reacts. Of course, the ET has also reported that Amazon is in talks with Aditya Birla Group for its more chain and also for and is also in talks with Future Group. So 3 ongoing deals is what they're reporting. But for now, watch out for CESC. That's a new name that has been shared. You also have PVR, which is set to be in the race to acquire Wave Cinemas. This is once again an ET report. The deal is set to be valuing Wave Cinemas at 450 crores, but the deal is expected to be completed and announcement is expected only by the year end. So that's PVR. You also have Shimaru Entertainment, which will be in focus. Now, known investor Monish Pabrai's Pabrai Investment Funds and MK Global FinServe are expected to meet the company today. So watch out for that name. As also for Wellspun Enterprises, where the promoter has picked up 1.7% stake between August 27 to 28th. The promoter had about 46% stake as of 30th June. Same is the case with Trident, where the promoter Trident Group has picked up a 0.4% stake on August 28th. The stock ended 2.7% higher yesterday, but that's another one that you should keep a track of on the back of this news development. But those are some of the stocks that you need to watch.
The problem for Vodafone has been they have had coverage issues and customers have been known to complain at certain areas where Vodafone has been a bit patchy. That being said, they've built up their customer base here to 6 million users, and in a population of 25 million, that's certainly not insignificant. What this deal does do is sort of it attaches TPG's strong presence in the fixed broadband space with Vodafone's relative strength in the mobile space, and it really could propel them into another level in terms of the Australian market. Up to now, what you've had is essentially a duopoly between Telstra and the Optus unit of Singapore Telecommunications. They've really had a real lock on this market, and we've had players like TPG, like Vodafone, who've been knocking on the door, trying to get into that market and not really making it. But this combined company can really take them to make them into a third force in this market.
Well, time to look at the top 3 stocks based on yesterday's market data and the delivery buying and selling that each of these stocks in fact saw. The first stock on the list that could be interesting in today's trade would be Idea Cellular. That was down about 3% in trade yesterday and saw delivery selling of nearly 82 crores. The delivery volume surged about 142% as the total volume managed to double for itself as compared to its 5-day average. Second stock to watch out for, AU Small Finance Bank. Now, this was the interesting one because it was down just it was up about 1.4%, while it saw delivery buying of 63 crores. Have a look at the delivery volume, which more than doubled for itself as compared to its 5-day average, while the total volume went down 6% as compared to its 5-day average. Last and final stock, JSW Steel, yesterday's stock of the day, that was up about 9% and saw delivery buying in excess of 250 crores. The delivery volume nearly doubled for itself as compared to its 5-day average, while the total volume surged more than 3 times as compared to its 5-day average.
The big brokerage calls for the day. First, we have Goldman Sachs on Vedanta. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 280, which suggests a potential upside of 23%. Now, Vedanta, which is one of the largest diversified miners globally, has attractive commodity exposure to zinc and oil, says the brokerage. Now, Goldman is expecting the zinc prices to recover in the short term and oil prices to remain at the current elevated levels. And going forward, strong volume growth across its major segments, that is zinc, oil and aluminium would drive the earnings for the company, says the brokerage. Now, though capital expenditure is expected to remain at an elevated level for Vedanta, dividend yield is expected to be strong at around 5%, says the brokerage. Lastly, recovery in zinc prices and volume growth would re-rate the stock going forward, says Goldman Sachs. Second, we have is UBS on Axis Bank. Now, the brokerage has maintained its buy rating on the stock but has raised the target price to 765 from 675, which suggests a potential upside of nearly 17%. Now, according to the brokerage, Axis Bank is well placed to gain incremental market share of deposits in the retail and in the SME segment. Now, for Axis Bank, currently only close to 4% of its loan book is vulnerable, which should also be resolved in financial year 2019, says the brokerage. Now, UBS is expecting a re-rating in the share prices of Axis Bank as visibility on asset quality improvement is seen in the second half of financial year 2019 and as growth picks up for the bank. Lastly, it is expecting a 19% loan growth over FY19 to FY21, which would drive a 46% growth in its EPS over the same time period.
Well, there's clearly lots to talk about over the course of the day. You'll find all the live market action right here on Bloomberg Quint Live. There are also several stories on the website that you should consider reading. Here they are. With 2 days to go before the current term of Rana Kapoor as Chief Executive Officer of Yes Bank ends, the lender is yet to inform investors about the view taken by the Reserve Bank of India on Kapoor's reappointment. Kapoor's term ends on the 1st of September. The Supreme Court of India, in an interim order, said that the 5 human rights activists that have been arrested by the police in connection with the probe into the violence that took place in Bhima Koregaon last year should be kept under house arrest till the 6th of September. Well, that's all you need to know going into trade today. But up next is Indian Open, so do stay tuned. This is Bloomberg Quint.